Hello everyone. I hope you all are doing well. This is week two of the macro overview series, and there's a lot of news to get into, so let's just get started. Okay, let's kick things off with Asia. First, what I'd like to talk about is Japan's new government spending package worth $197 billion. This package was unveiled just hours after the central bank decided to stick to its ultra loose monetary policy, which is aimed at increasing the money supply in the domestic market. Coming back to the package, the aim of this package is to ease impact of rising commodity prices and a weak currency. Moreover, they are also focusing on tackling high living costs. Inflation in Japan compared to other countries has been low. However, they are strongly determined to bring this inflation rate back to the target level of 2%. Uh, so, what this package will include is subsidized electricity and gas bills for households and coupons for pregnant women. So the demand in the Japanese economy is already weak. Therefore, any further fall in consumer spending will negatively impact the economy. So the Japanese government is hoping that this package will stimulate consumer spending. The Prime Minister of Japan has expressed his support for the central bank's policy, but according to some analysts, the central bank might might be under pressure, might be under increasing pressure due to the introduction of this new spending package. Next, I'd like to talk about China's growth and how it's slowing down and how exports are failing to rescue the economy. So, the economic growth in China did not meet the annual target of 5.5%. There are several factors connected to this. There is an ongoing property crisis in China as house prices in the secondary market have fallen down. Moreover, the growth in retail sales was there, but it was very low, and this was due to stringent COVID lockdowns, which continue to hold back consumption. However, in this economic situation, there has been a positive for China, where where the Chinese economy has seen a rise in infrastructure and manufacturing investment. Lastly, I'd like to talk about the Australian economic situation, wherein they actually benefited from the trade sanctions imposed on them on particular Australian products by China in 2020. So, as a result of these trade sanctions, Australia had a trade surplus worth $28 billion in the second quarter due to strong export activity and the booming price of coal. Moreover, there have been improved trade figures for Australia due to Chinese dependence on iron ore, wool, and natural gas. An example of this is in 2021, where Australia exported around $175 billion worth of iron ore to China. However, this was not always the case. Uh, so during the pandemic, China's demand for iron ore and other minerals, fossil fuels, fell due to the fall in productivity. Uh, and this affected Australian exports heavily. Therefore, Australia decided to loosen the new tariff, which basically boosted the value of export to other Asian countries such as Japan, South Korea, and India. Thank you for watching this brief summary video of what's been going on in Asia this past week. Hope you enjoyed it. Lastly, before I leave, please do follow our social media pages as shown on the screen above.